Hello guys, welcome back to the channel Crypto Global 100. Today I'm gonna talk about the trading types. A lot of people have asked me about the trading types. Should they buy now? Should they hold for how many days? Should they close a trade in 1 day, 2 days? Okay, should they take the profit now? So to question all those queries, it has to depends on the individual mindset. What are you aiming for? What is your trading style? So the trading style matters the most. You have to find out which type of trader you are. So for that I'm gonna take you through the different trading types today. And let's start the video. Before starting the video, please subscribe to my channel and share the video. So let's start it. So there are 4 types of trading style. Okay, number 1 is called the scalping. I'm gonna take you from the shorter time frame to the largest time frame. Okay, so the first type of trading style is called the scalping. Okay, the second one is called the day trading, third one is called the swing trading, and fourth one is called the position trading. I'm gonna take you through and with the details of these 4 trading styles, and you have to find out what type of trader you are. Okay, once you can go through through this video, you will know that what type of trader you are. Okay, so moving on, this is the trading time frames. Okay, so let's find out the trading time frame. On the trading time frames, you can see the scalping usually takes place, or the duration of that scalping is within minutes or seconds. Usually it means that whenever we take a scalping trade, it usually closes within minutes or seconds, even in seconds. Okay, you have to get in quickly in and out. It is just like that type of fast trade, aggressive trading. The second type is the day trading, where multiple trades can be taken on the same day, just like the scalping. But here I'm gonna talk more in detail in the next slide, where you have to open your position and close it on the same day. On the swing type of trading, you do it for several days. Okay, you open the trade for several days or even weeks also. And the fourth one is the position trading, where you open the trades for months or even for years. So these are the 4 types of trades and their relative time frames. So let's talk more in detail about each type. Okay, first off, we're gonna talk about the scalping. Now, starting with the scalping, the duration, as I have already told you, that the duration of the trade usually lasts for from few minutes to few seconds. Okay, usually we have to get in the trade in within few minutes and quickly in and out type of trade. And for the chart analysis, this is where a lot of people get confused, that for scalping we have a different chart, for day trading we have to find out the different chart. You can't analyze the day trade, or if you have opened a daily time frame chart on, and if you want to do the scalping, then it's not gonna work. You have to open 1 to 15 minute chart. Okay, maybe you're gonna draw the levels from starting from the 15 minutes then to 1 minute chart. Okay, then find out the levels, just like I do in support and resistance levels. Okay, then it would be easy for you to do the scalp, because in scalp you have to quickly in and out. Okay, and number 3 point is frequency of trades. How many trades do the scalpers? Okay, they do approximately more than 5 trades. Okay, usually the scalpers do more than 5 trades per day, because they have to stick to the screens for all day to find out the moves. Okay, so they do more than, if you are doing more than 5 trades per day, then you are a scalper. Okay, entries and exits need to be highly precise. It means, what does it mean? It means that, for example, you buy a cake or any asset which is at let's suppose you say that the buying area is $2. Okay, it should not be like, you know, $2 to $3. It has to be three. It has to be the point or the precise, the, you know what I want to tell you, it has to be precise. It should be $2. It should not be $2.1. That is why, because in the shorter time frames we have to find out the exact entries. Okay, so moving on, I think you got this point. For example, there is a coin which is you have drawn the levels, and the level from the support is at, you know, 1.5. okay, 1.5 is your buying area. Okay, that is your buying area. It should not be like 1.3 or 1.4. It has to be precise exactly. Okay, next on, margin of error has to be extremely low. It is correlated with the first point. It means that it has to be clearly precise. You should place a stop loss in this case as well, because if the price breaks below your point of buying, then it would be an invalidation to your trade. Now moving on, this is the most stressful form of trading, guys. Scalping is the most stressful form, and it requires a lots of screen timing. And if you are one of those guys who sticks to the, you know, screen time or sticks to the charts throughout the day, then you can be a good scalper. Okay, because you can afford to give time. Now next up, the risk management. You should not invest more than 2 to 3% per trade in this scalping, especially. Okay, scalping is a short time frames trade, so you should, you know, you should risk or almost 2 to 3% with the minimum amount, so that in case your trade gets you know, hit or invalidated, then you can only lose 2 to 3% per trade. Okay, because if you put 50% and you hit your stop loss get hits, then you will lose a huge amount of your capital. So if you are scalping, if you're doing the scalping, then I advise you to you know, put in 2 to 3% per trade. Now next up, you have to do lots of trades per day, and that should be with a small risk, because during as you can see in the next point, tend to have small targets due to short trade durations, because this is the main point. Price does not move that far in the shorter time frame. You can see if the trade is of the minutes, you know, the movement could be, you know, might be in the form of 0.5% or maybe 0. Even you can, if you are aiming for 5% in the minutes, that is not possible. You should aim for, you know, small percentages. Okay, small percentages, and that is why you have to take many trades per day, and your targets should be small. You don't have the large risk to reward ratio. The risk and the reward ratio, the take profit should be very small. Okay, a small risk, because I told you the risks should be small, and so does the rewards, and the same goes with the last line. Now note, the time frame is directly proportional to risk per trade. Again, I'm repeating, guys, that time frame, okay, whatever the time frame is, 1 hour, 2 or 3 or 1 day, 1 week, is directly proportional to the risk per trade. I have not copied it from anywhere else. This is my personal experience, that is why I'm sharing it with you. So larger the time frame, you can risk more per trade. Okay, just keep that in your mind. Smaller the time frame, smaller the risk should be. Okay, I have not copied it. I have prepared this PPT for you guys, and it took me, you know, approximately 2 to 3 hours to prepare this and to give, you know, the exact summary of the you know, each type of trades. So do watch this full video so you can get the idea. So that is called, this is the scalping. I hope you got the idea about the scalping. Now moving on to the next slide, this is the day trading. Now this is the next in the type. Okay, day trading. Here the duration lasts for the 15 minutes to the few hours. Okay, you're gonna join in the trade, and you have to quickly get in and out within a day, within the same day. Okay, and it can last up to 15 minutes to few hours. Okay, for this you have to do the analysis on 13 minutes, 1 hour and a 4-hour chart. Keep that in your mind. Okay, you have to apply these three charts. Don't apply the 1 day chart. Yes, you can do the 1 day just to mark the boundaries, but 4 hour would be more precise for the type of trading you're doing. Okay, if you're doing the day trade, then it would suit you to implement 30 minute to 1 hour to 4 hour analysis. Now the frequency of these type of traders are ranging from 3 to 10 trades per week. Okay, they usually do 3 to 10 trades per week. And moving on, we can have the entries and exits are less precise as compared to the scalping. What it shows that it means that the buying area can be, if you have specified an area like you're gonna buy from 1.2 to 1.3, then this is the range. This is less precise as compared to the scalping, where you have to be very precise with your entries. Okay, you have to exactly hit that spot. Okay, that has to be sniper entry. But in the day trading, you can have a little margin of error, or more buying area. For example, 1.2 to 1.5, this could be a good area, a good buying range. I hope you understand. And this point also covered in this, the margin of error is higher than the scalping. Yes, you can do the higher margin error in this day trading style. Okay, and it is not the least. Yes, it is least stressful compared to scalping, not the least form. Okay, but compared to scalping, it is less stressful than the scalping, but it still requires a lot of screen time, because you do the maybe you're gonna do 2 to 3 trades, or maybe 1 to 2 trades per day. It depends on your trading strategies and that stuff. Now moving on forward, risk management. It should be, in scalping we saw that 2 to 3% was enough, but in this case 3 to 5% risk, high risk. Okay, again coming to that point, time frame is directly proportional to the risk you can take per trade. So in this case, as the time frame is higher, okay, as the time frame is higher, we can take more risk, but still it is a safe risk. 3 to 5% is a safe risk you can take in the day trade. Now moving on, 1 to 2 trades per day with comparatively larger risk to reward ratio, because when you are doing the day trade, you have to take out the more profit as compared to the scalping. And also guys, one more thing, you have to buy the trend trades, because during the day you have to follow the moves which are in the trend. Okay, which follows the trend, that would be more profitable for you guys. Go with the trend. Okay, go with the trend, don't go with opposite sides, because you might gonna fail into taking the opposite trend trades. Okay, so that was the day trade analysis. You can take the screenshot. I'm gonna pause it from here. You can do that, take a picture, and also I'm gonna paste a link below where you can download this PPT form. So now moving on, this is the third form of trading, which is called the swing trading. Okay, which is usually my style of trading. I usually do the swing trading because my trading lasts for few days to few months. Okay, and in this form of trading you get the good profits, but consistent profit, and it is not that stressful as compared to scalping and the day trading, although those are very practical as well. But it depends on your goals and the time you can give. So in this swing trading form, the duration lasts up to few days to few months. Okay, and going on to the chart analysis, this is the main key, main point for you guys, chart analysis, because opening a different chart, opening a daily chart, and you're doing the scalping, it's not gonna help you in any scalp trading decisions. So for the trading decisions, you have to apply the right tools, right time frame for the right type of trading. Okay, this is very important, right tools for the right type of trading. So for the swing trading, if you're doing the swing trading, then you have to apply the 4-hour daily and weekly chart, and frequency of the trades. Usually swing traders take 2 to 8 trades per month with high risk to reward ratio. Now the entries and exits are less precise as compared to day trading. You're gonna often find out that I draw the double levels. Okay, I draw the double levels. Why? Because for the day trader, for the swing trading, I give you the range. For example, the price is in 1 to, you can say 1 to 0.5 or 1 or from 1 to 5. Okay, for example, this is the range 1 to 5. Okay, so I'm gonna tell you guys to buy within this range. Okay, so what is it? The entries are not precise. That is the meaning of this. Okay, as compared to day trading, this is best for ranging. Okay, ranging means when there's a level, when the price is moving in swing forms like this one, like the waveform, where you can take the entries from bottom, from the support levels, from the demand zone, and you sell near the resistance areas. So this form of trading is very good, and if you are doing that swing trading, you have to select those coins which do the swing trading. Okay, moving on, the margin of error, it is the same as above. Margin of error is higher than the day trading style. It is less stressful as it does not require much screen time. You have to, you don't have to look for the charts, every second or every minute or every hour. You can see only 2 times in a day. Okay, there is nothing much stressful. Okay, this is a very less stressful form. So that is why I prefer the swing trading, because it gives you the less stress. Then the less the stress you have, the more and the better your trading style would be, the better the trading would be. It depends on your lifestyle as well. So moving on, the risk management in this form of trading must be 5 to 10%. Now again, coming back to the same principle, time frame is directly proportional to the risk per trade. Okay, so at this time, the duration is going to last for few days to few months. So I'm gonna take that risk management up to 5 to 10%. I'm gonna put in more capital, okay, per trade, because I know that I have to take in this trade for the months, because I have drawn the levels on the daily, weekly charts. Okay, so the profit to loss ratio would be higher than those small time frame charts. So coming up to the next point, more risk can be taken because the trade frequency is small. It is very low. Trade frequency is very low, 2 to 8 trades per month. Okay, so that is why more risk can be taken, and it only captures the one side of the market. Okay, you have to capture the one move in the market. You have to capture the breakouts or the buying at the bottoms, buying at the support levels, and then you capture the one move, like I told you in the example mentioned. Targets are higher than scalping and the day trading. Okay, the targets must be higher than the scalping and day trading, because you have a huge time frame. It all depends on your chart analysis, guys. Again, telling you, this is the key area. This is the key. Chart analysis is the most important thing in this PPT. Okay, you have to do the right analysis for the right type of trading. You can't set high goals for the scalping. It's not gonna hit. So you have to keep that in your mind. This is extremely important. Keep that thing in your mind, guys. Chart analysis, if you're doing the swing trading, do this form. Now moving on, we have position trading. Okay, now this is the last form of trading, and it is the least stressful, and this type of trading can last for few months to years even. Okay, and usually they have the highest portfolio. They are the whales, you can call them the whales. They usually buy in the huge amount. Okay, and usually they have huge portfolios, and for this you have to apply the daily, weekly and monthly charts. Okay, you have to buy at those key areas or from where the breakouts are gonna happen. Okay, so you have to place your buy orders, and the range would be higher than before. Frequency of trades, you can take 1 to 2 trades. If you are taking only 1 to 2 trades per month, then you are position type of trader. Entries and exits do not need to be precise. I told you guys already. For example, there's a range. Okay, now the range would be like, you know, for example, it would be something like $1 to $10. Okay, so anything going below, even if you buy at $10, the price can come down to $1, and then from there it will take off. So it doesn't mean that if you bought at $10, you're in, you know, stress, or you're in loss. So these type of traders do not worry about the crashes or the dumps, because they you know, they take the range. Okay, they don't worry about the stuff because they are in for the long term. So position traders, they don't have to worry about anything else if they have the proper chart analysis and the proper risk management. And it is also the least stressful, as it does not require any screen time. All you have to do, draw the levels on daily, weekly, monthly, and place your buy orders. Eventually, when the price is gonna hit that level, your buy orders are gonna fill, and then you have to wait for a few months, and you have to set your stop losses and the sell targets or take profits, and then you can easily, you know, take your but you have to be patient, guys. This type of trading needs a lot of patience. It is the highest patient form, man. So moving on, risk management per trade, 10 to 20% you can put in. Okay, you see, the higher the time frame, again, higher the time frame, the larger the risk you can take per trade, and the shorter the time frame, the less the risk should be. Okay, high risk can be taken because of trade frequency is lower trade frequency, and that is why you can take high risks, and it captures the whole move of the market. Maybe the price is gonna move, you know, for example, you bought at this area and you have targets at this area. Okay, the market is not gonna move like this. Okay, it's gonna move like, you know, first it's gonna take some area, and then it's gonna move down, then, you know, in the form of patterns. Maybe it's like accumulation, ranging, and then we're gonna form, and then it will reach the target where you have set the take profits. So that is how you do the position trading. And for the position traders, the dumps don't matter at all, because they bought it for years. They have the targets for, you know, months and years. So they usually select 4 to 5 coins where they put in the 10 to 20% per trade, and they have huge portfolios. So the summary here, sorry guys, the workable solutions, I, you know, forgot to edit this text, so sorry for that. Anyhow, this is the summary. Okay, the summary here, this is the this is the comparison basically of different styles of trading. Scalping on, you can see the scalping, the trade duration, chart analysis, risk per trade, frequency, and stress trial. You can pause the screen and take a screenshot. Now the scalping takes a few minutes to few seconds, and moving on, day trade takes 15 minutes to few hours. Again, going on, swing trading, few days to few months, swing trading, sorry, this is a position trading, forgot again, sorry guys, forgot to edit the text, sorry for that, but you get the point, guys. You can pause the screen, okay, and take the screenshot, and you can you know, save this chart. Okay, save this chart so that you can depend on this chart, and you can know that what type of trader you are. It is the most important. Okay, so what type of trader you are, it depends on your personality, it depends on your screen time availability, how much trade you can take per how much risk you can take per trade. So it all depends on your personality. If you want to hold for the long term, if you are a long term holder, the dumps doesn't matter you, then you would be a good position trader. And if you can spend more time on the screen, you know, doing chart analysis on the shorter time frame, okay, then you can be a good scalper or the day trader. And if you like to put in small amounts, and the combination of these things, okay, the combination of, for example, small, you like to invest in the small amounts with more time, screen time availability per day, then you are the scalper. But if you can't give much time, then do not do the scalping. Okay, do not rely on the signals. You have to get yourself educated. You have to learn the skills. Otherwise, if you are in for the long term, then you would be a position trader. And again, it depends on your lifestyle and all that stuff. So I hope, guys, this was the detailed video on the types of trading, the style of trading, what type of trader you are. So I hope this was an educational video, and if you like the video, please mention under the comment section that did you like this video or not, and give your suggestion and the opinions and the feedback. I would be looking forward to hear that. So that's it from my side, guys. Thanks for watching, guys. Take care. Bye.